Good evening, traders. I'm Narnakshi Swami, welcoming to my channel. In my morning Nifty levels video, I had mentioned that the structure is bearish. The market trend will be bearish. That was my view. Before to that, how do I prepare myself for the trade? I mark the high and low of the previous day. This one is, let me make it line, and this one is high. High and low of the previous day. Okay. This was the thing. And later, I lost closing candle. Last closing candle of the previous day, that was bearish. Negative volume. Let me write down the negative volume. That too, huge. If I place the cursor, it is showing minus 54,000. It's in lakhs crores. So, and then RSI reading corresponding to that was, RSI reading was 40.75. That is bearish. Okay. These were my recordings on the previous day to take the trade. Apart from that, these are with the volume and with the RSI, my cross check. Okay, I made that this one. Now, I'm enabling the time-wise weighted average price. What happened with this? Yeah, I'm not disabled this. Okay. Now, I'm enabling this time-wise weighted average price. One is longer one, another one is shorter. Let me go to the setting. Anchor period is 4 hours and time frame 30 minutes. That is the yellow one. And this one is 1 hour. Anchor period is 1 hour and the time frame is 15 minutes. So, the structure of the market, you can see by naked eyes. Let me hide these things. The market had moved higher and it had continued down. So it was the move. Anticipated move was the continuation of the down move, measured move like this. This was my expectation. This was my almost 23,800 to 23,932. That was my target. So market will go down. I had prepared for this level and all those things. This was my observation, structural observation on the previous day, preparation of the trade on the previous day. Now I am enabling these two time-wise weighted average price to know where are the levels for me. See, around this level, if I place the cursor on this level, time-wise weighted average price reading is showing 24,122. And another reading, I'm getting 24,099. That is the shorter period. Yeah, whatever it may be. So these are my resistance levels, and my plan was if the market goes up to that, I'm going to see for the rejection in the market because there were sellers present in the market. So you can see I'm placing the cursor on that. You are getting 24,099. Market gapped up. In contrast to the Gift Nifty, what it was suggesting, Gift Nifty was suggesting down move, but it gapped up and it started moving towards the moving higher. This was a positive candle in the market. Live market, it was a positive candle in the live market. Then, and also confusing the traders. But because of this time-wise weighted average price, I knew that these are the resistance area. So it was my plan. You will not get disturbed by this because the trend direction was down. The continuation of the direction was down. Instead of that, if the market goes up, as an amateur trader, they will tend to go long. They will try to look for the call option. They will enter into it and they will get caught because it's a bullish candle. But you need to wait for the closure of the candle patiently. And also when your conviction is towards the downside, you should stick on to that. Simultaneously, I'll go, this was the rejection. When rejection was seen and the continuation of the second bar was negative, this is a bearish thing. Bearish thing. When the market within the first hour, it made a range. So if I make a block in this range, so you can anticipate measured move for this trade. That is 23,728 should be your target. In the live market, you can count on that. Okay. Now coming to the same way, when it came down to this, I had applied 24,000 call option and simultaneously 24,000 put option. You need to be prepared for the market. It could have surpassed that resistance. It could have gone up. Who knows? I'm not the market maker. So you should be prepared for that. For that, why did I choose 24,000 call option and put option? Because this was the 50% level. From here to here, around 50%, I selected 24,000 as the round figure as my two levels for 24,000 call option as well as the 24,000 put option. So when the direction was confirmed within the 15-minute candle, then I went for I had already marked these levels for me. See, what happens in the market is when the index starts moving down, the price of the option premium decays more than so this was the reference point, 92 rupees, 182 rupees, 108, and then 108 rupees was the reference point in the market. So when the market starts coming down, it made a low of 124, and the next candle is a follow-through candle. You can see next candle is a follow-through. But it was a little bit tricky. The market came down and it made a low, higher low, 129.1. Here, after that, you can see very clearly the weighted average price, both the longer period as well as the shorter period, they started converging at this place. If I put a cursor over here, you can see a convergence around, it's not showing. Exactly, live market, you can see around 169 to 161. Here, I have to move it further. This is coming in between. Okay. Here, if I place the cursor here, why it is not giving reading, I don't know. This has to give me reading. It is not showing. But they converged with each other and the shorter period moving average crossed over and diverged. It started diverging from this, moving away from this, moving away from the longer period moving average. At that time, the price was 194 here. Why it is not showing? Yes, at that time, price was 178 to 182. If you could have taken the position before itself, you have already prepared for the resistance in the market, rejection. If you would have taken position around here, you should not have feared. Anywhere in between, you could have gone long around this area. You could have not panicked because this is the resistance area and naturally Nifty is getting rejected over there. So usually when the market gets rejected, it will try to, when it gets rejected, it will try to move higher like this. It will not be, sometimes it will not be a continuation move. This is a deceptive move again. Again, see, you can, if you place the cursor already, the shorter period weighted moving average crossed over. It made a bend at the level of 24,029. So for you, next in the live market, next reference point will be 24,029. Live market. When the price started getting rejected and a follow through candle, red candle is formed, and the divergence in the, similarly in the index, you could have gone short in the market. You could have held your position, see the appreciation of this put option, 24,000 put option. If you could have trailed your stop loss and held it, you could have gained 429 to 450 points. That is nearly 228 points. 228 points. For this trade, actually, you need setup, you need preparation. Randomly, you cannot trade. You should know what has happened in the market and you should see. Here you can see in the market now for the tomorrow Nifty, this is the immediate resistance, 23,722. It is the immediate resistance in the market, and while closing, this shorter period moving average has gone above the longer period moving average. Okay. So you mark these levels, 23,630 for tomorrow's trade, 30 and 23,611. 23,611. So, and again, we need to cross check with the volume and also RSI. Okay, here corresponding to this candle, in this candle, you can see net volume decreasing. You have to write down for tomorrow's trade like that. Net volume decreasing. And I'm enabling the RSI. RSI is not positive. It is oversold, but it has crossed above its 14 period moving average and it has moved away. So it is showing some sort of bullishness, but it can face resistance around 50. The reading of 50 can become resistance. Suppose in case, if it starts crossing this level, around 41 to 42, then it can correspondingly, the price can move up to 23,722. I've already marked the resistance. So it is clearly showing this will act as the resistance. Suppose opening bell, suppose if it gaps up, then the intention will be towards the downside. Intention will be towards the downside. Initially, we need to see, because while closing this shorter period moving average, let me hide these things so that I can show you shorter period moving average has crossed above the longer period moving average in intraday. So for the supports, immediate supports are, it is very nearby, immediate support. It is very tricky tomorrow. 23,591, the weighted average moving price shorter it's giving if you place 23,593. So this is how you need to prepare your trade. If you would have prepared like that, you can master this anything. Actually, it is a boon. Time-wise weighted average price is a boon. It is like RSI calculating, giving weighted average price and calculating the price average. Time-wise weighted average price. That is a boon. Actually, in the trading view, it is somebody has coded for it. Now, I don't think somebody has coded. This is an inbuilt trading view indicator which can be used. If you know the price action, we should know where the price is trading. If price is trading above the average price, it goes back to 15 minutes, whatever the designated. I've anchored for 30 minutes, 4 hours. 4 hours means that it will go back to the previous day level and gives the weighted average price. So this weighted average price and the shorter period weighted average price is crossing over, means it is bending and crossing over, means the money is coming into the market. Some sort of reversal you can anticipate in the initial hours of the market. In the opening bell of the market, you can anticipate for that. We need to see how it will proceed. So it may not be a straightforward move. It may go up to 23,722 and it can get rejected and it can come back and it can start crossing the barrier. So it can gather up some momentum by collecting by the participation of the new buyers, new money coming in. So this is how you need to master this. For an option trader, it becomes, if you know the reference of these price points, option premiums at this level, you can hold the position. See, if you would have taken position and when it goes to 100 and say in this candle, the reading is 152, it has made a 232. 232. So you will get panicked if you would have held the position, if you would have returned back and it comes there. You will not hold the position. But by marking these reference points, it is the beauty of this weighted average price. Weighted average price, shorter period and longer period. You know the values. You know the value. You can keep your stop loss. You can hedge your position. This is like a fence. You can put it and it cannot decay much. Okay, friends, this is my effort for you people to understand, to master this. indicators by cross-checking. These are the early entries you can make out. So setup for the day, you can see this put option is coming down. It is showing crossover here, fall below the shorter period, whereas Nifty has crossed above. So correspondingly, we need to look for price action tomorrow and trade. You should prepare for some reversal in the morning. How it works out, then you need to mark the levels of everything at this point. At this point, what is the price of the Nifty is 23,600. So you need to choose 23,650 call option and 23,650 put option, and you should prepare and mark the levels so that you will be prepared for that, for the premium levels. Then your trade will not hurt you. Thank you very much, friends. Nalnakshi Swami signing off.